Welcome to the Equity Team Podcast, where we provide Sedona, Arizona real estate insight to help you thrive during your next real estate transaction.
Hello, everybody. I'm Chad McMahon with the Equity Team. I am an investment specialized real estate agent in the Sedona, Arizona area. So what I'm going to go over today, I'm going to make this really quick. I'm going to share my screen right now, and I'm going to show you with some graphs what's been happening over the last 2 years from our association, the Sedona Verde Valley Association of Realtors, SVVAR. That's the association, the MLS association that covers this area out here. And that includes not only just Sedona, but also the nearby towns as well. So here we go. I'm going to dive in. Now, the first one here is days on market. Now you can see if you really look at this and peel those eyes back a little bit and really focus in, starts in September 2021, goes all the way to now. What I find most interesting, of course, is what's happened in the last 6 to 12 months, and particularly what's happened over the last 3 months. So we're going to be focusing on this part of these graphs, and I'll go through all 6 of these, and I'm going to make this really quick. So you can see here there was quite a stable, the market was very stable until we hit right around October of last year, and then things really went kind of crazy, spiked out quite a bit. So we went from average days on market was, anywhere from 40 to 60 days on market. And then it spiked out at 100 days, came down a tiny bit when interest rates came back down a little bit, went back up. So it spiked again at about 100 days on market. And then it's dropped way down again. Now we're down to, right now, we're almost 80. It's actually, I believe it's about 71 to 75 days on market right now. I'm actually getting 76 is the most updated number. So this is August numbers. We won't have September numbers for another month, but August numbers for this year, the most updated 1 month ago was 76 average days on market. So this is for listings. Okay. Now, in terms of months of inventory, you're going to see a lot of these graphs are going to look very similar, but there are some differences. Now, months on inventory, what that means is the number of listings that are on the MLS, active listings. And if no more properties hit the MLS, then how long would the inventory last before all of it sells? And so we were pretty consistently at 3 to 4 months on market, which is good, and that's a good solid number. Now we have a lot more because inventory has grown. So right now we're right around 5, just over 5 months on market. But again, you can see here, this time it hit a different timing. So the other stuff was October, but this wasn't. So here, right around late June, mid to late June of last year, okay, not of this year, then all of a sudden it started to really climb. We got more inventory, and it topped out in August of last year. And then it kind of stayed pretty consistent, until we got somewhere around March or April this year. And then it's gotten a little cattywampus on us again here. So it dropped back down, not a ton, but it dropped down to 3.59 months on market. And then it's gone back up. So we have, again, it's right over 5. My expectation here, it's really hard to say. It's hard to say what's going to happen with inventory. We're seeing a lot of listings that are hitting market, but properties are selling. They are, even with these high interest rates. So it's cruising along. Now, number of listings, very similar data here, but you can see the graph looks quite different now. And generally, there's a downward trend of number of listings. So this is really interesting. Number of listings, you would think it would match the months of inventory a lot more closely. But you have to bear in mind that number of listings and how long they're on market, those things compound. So you can see going back 2 years, it was 120 and it was kind of bouncing around here, but then it really dropped down. A number of listings, because the properties were actually moving really quickly last year, so it stayed low. So number of listings is actually, it's actually not that high. I mean, we have decent inventory, but properties are selling. So number of listings, you can see we did spike here in May of 2023, but we're back down here. And as of last month, it's 79. These are single family home listings that do not have any land rent. You know, it's kind of just your normal single family home. It does include, so it's just not going to be like condos and townhomes and things like that. If you ever want that data, just reach out. I'll be happy to create a video, or I could just get you that info and give it to you privately, and that's fine too. Now, price trends, I'm going to try to go through these last three a little bit more quickly. You can see it's pretty consistent, actually. So, and by the way, I'm excited to show you the next one because there are a lot of myths, you know, about sales price versus list price, and there's a lot of bad data out there. So we'll get to that in just a second. But price trends, you know, this is all about median sale prices. And so 2 years ago, our median was $485K. And again, these aren't just Sedona, it's surrounding areas. So it's a big spectrum of prices, and it really, but your median price, 485, you can see it really topped out at 700. It's a huge climb. So even just about May or so, you know, plus or minus around May of last year, 2022, we saw things really top out. And it hasn't crashed, but I mean, you know, it's just gone up, down, up, down, up, down. You can see even with the softened market, it's gone up and it's gone down. So the baseline is about where it is now, which is 555,000. So you can see at 555, we're actually higher median than we were 2 years ago, which is really interesting. And I think that we're due pretty soon for a course correction. My prediction here, based on what's happening with interest rates, I think our median is going to drop a little bit more, but then it's going to kick back up again. I think it's going to bounce back up. Again, properties are selling. And this is pretty loose data here on these price trends, but it's good to be aware of this. Okay. Now, sales price versus list price. Now, bear in mind, 100%, meaning that the sales price on average is the same as a list price, 100% goes across this line right here. Now, you can see 2 years ago, it was quite close to 100%. It went above 100%, not by a ton, but in March to May, to late May, it was above 100%. Properties were selling more than they were listed for on average. But you can see now, and this looks like it's a big dive, but it's not, because we're looking at about 96% here in December of 2022. So about 9 months ago, 9-10 months ago, we were seeing that we were almost 96%, you know, so really close still then. Now it's even a little bit higher. Now we're at 98%. So it's actually really close. A lot of people think that you can come in right now and you can lowball and you can buy. Sometimes you can, okay, but it's case by case. But understand here that averages are actually showing that we're at 98% of listed price. So it is really close. And this is average. So sometimes we're seeing that properties are selling at 120% of the listed price. So above, way above. In fact, sometimes it's even 130%, but then sometimes you get a deal and it's 70%. So it can be the other way. So it's always case by case, and just ask your agent. You know, of course, I can help you, or a team can help you with questions and what's likely. There are a lot of factors that go into it. One of the things that I always do before making any offers is I talk to the listing agent. I find out, okay, what's going on with the seller? You know, how motivated are they? Is there anything they really want aside from more money? You know, is there anything that they really want that's going to help with negotiating to benefit my client, the buyer? And there are a whole bunch of other questions too. I go through and I ask a whole bunch of questions. So that kind of helps me try to create a win-win scenario where everyone can get what they want. And a lot of times, of course, with buyers, they want to pay less money, but sometimes it's about the cash, you know, out-of-pocket cash. Sometimes it's about length of escrow. Sometimes it could be anything. So there are a lot of factors there, and it's not just about purchase price. Last one here is volume. Okay. So this is just total of sold volume. This one's not as helpful. This is something that's great for brokers, you know, to track. things like that to kind of see how their office is comparing elsewhere. But it's just a general indicator, total sales volume. You can see 2 years ago, 75 million in sales volume. And then we're actually really close to about the same, 73.4 million in sales volume. So by sales volume, it's actually really similar to where we were, but you can see there's a lot of up down here, and it really dropped down at the beginning of this year. But again, this is data that's a little less applicable for most people that are interested in buying or selling property. So I hope this has been helpful. I'm always happy. I have a lot of clients that reach out and they ask me to create videos with certain topics. Please let me know what yours are, what you would like to see. And beyond that, good investing, happy investing. Take care.
Thanks for tuning in to the Equity Team Podcast. To speak with one of our top agents, visit us at owninaz.com. That's owninaz.com. Or call us at 928-323-0031.